It protects your own home from capital gains tax, but don't take it for granted. It's pretty easy to lose it. For example, if you took in boarders, someone pays you to live there more than what their share of the electricity bill is and the food bill, then that's income to you. It's got to go in your tax return, and your house is then exposed to capital gains tax because it's producing income. So possibly half the house will be subject to capital gains tax on sale because half of it was used by the tenant, like their room, and half the use of the lounge room. Yes, if you build on land that you've bought, you can backdate your main residence exemption for 4 years before that house is completed. So as long as you move in as soon as the house is completed and you haven't covered anything else with your main residence exemption during that 4 years, you can protect vacant land, and it's unusual. But the trouble is, if you buy an old house on a property and you live in that, and then you demolish that house and then build yourself a new one, you've got to again be very careful to move into the new one as soon as it's completed. At law, you don't have a right to then cover both houses with your main residence exemption, the old one that you demolished and the new one that you built. But the tax office does give a concession under ID 2003/232 that they will let you build a bridge and cover both, but only if you move into the new one as soon as practical after you've built it and live there for at least 3 months. Well, here's another trap I've seen people fall into. Take, for example, that you're overseas, working overseas, but your children are here in Australia. So you buy a home for them close to the university in your own name. Now, your children over 18 are living there. You're not. You're a non-resident of Australia for tax purposes. When you come home, even on holidays, you can't establish it as your main residence. While you can cover a place with your main residence exemption while you're living overseas, you can't establish it as your main residence and then go overseas if you're a non-resident all that time. So when they come back here on holidays, they're just holidaying, they can't establish their main residence, they never lived in the place before they went to work overseas. So when they go to sell that house, they're up for capital gains tax on it, even though family lived there all that time and it was never rented. Don't take it lightly. The tax office is very diligent in pursuing the main residence exemption.